So guys, in this video we will analyze the pound US dollar, and we start with a top-down analysis. First on the weekly chart, let's find the support and resistance. Always I use the last week's low as the support, especially for an intraday trader. That's the most important thing, to know the boundaries of the weeks or of the days, right? So last week price, and we can take in consideration the lowest low of last week because the candle is closed. So I like to draw with red color the support and with green color the resistance. So first support is this one here. Now, if price, I like to use only two supports and two resistance on the chart to make it very clear. If price it's going to break below this area here, looking at the left, the next area of support is this one here, which is very close by. If we measure the distance between these two, it's just 25 pips on the weekly chart. That's an insignificant area. So I would like to take this lowest as the most relevant next support. So this one here, I call it with S1, and this one here, of course, it's going to be the S2. Now, in case the price will push to the upside, as per this reversal weekly candle indicates, the first area of resistance we have to be aware of is this one here, of course, because that's the most recent resistance. Now, many traders, I see it on the coaching where I do private coaching all day long, and I see many traders, they don't want to pay attention to this nearest resistance because they think if price came that much, then likely it's gonna push higher. But that's really wrong. In trading, we have to trade what we see and never ever what we think. Otherwise, how can we accept the probable nature of trading, right, guys? So let's have a look at the next recent resistance on the chart. And if price breaks below and close below this R1, the next area it found to be this high here. Now, if you're watching my live trading webinars, you will understand how I do the analysis here. But of course, I will I will post a lot of educational content so you guys will learn. Now, we kind of identified what we will be looking for next week. We have this resistance here, we have this support here, and based on this reversal candle, we will mainly looking for some long positions. Now, we need to understand that we have boundaries, and we don't say we're going to look for longs and that's it. We have to follow the market structure and we have to follow the price action behavior. Now, I'm a big fan of Bollinger Bands, and in my trading, Bollinger Bands are the only indicator I use on the candles, and the RSI I use it for some momentum and entries criteria. Now, in trading, pretty much we have to be a little bit open-minded and trying to understand on any time frame what's going on, because it's going to, the lowest the time frames we trade, the more specific we have to be. But in the top-down analysis, we go time frame by time frame and we analyze the chart. So in this occasion here, we had the price making lower lows, and the indicator, the RSI, plotted bullish divergence on an oversold area. That's very strong um, indication that the market may be exhausted and it's time to reverse. Now, we didn't take any opportunities here because price didn't have any strong support. Remember, we drew this support after this weekly candle closed. So you cannot blame yourself why I didn't take this trade here, simply because it wasn't obvious at that point. The support wasn't there. Support created after the Friday's after the week's candle close. Now, what else can we extract from this time frame? We can see that every time, I will start from here, right? Every time the price create an impulse move, the retracements were very shallow and short-term in duration compared to the impulse move. But in this occasion here, price created a new low with only two bearish candles. And see, guys, the retracement was extremely volatile. Big bullish candles printed on the chart, and that shows that buying pressure maybe is here. Now, if you're a trader that you're going to go to the hourly chart to execute, and that's where we want to go actually, we're going to zoom out and try to identify if there are some channel lines we can draw on the chart, and but that's not a valid channel right now, because the market, it break below and very easily it break above this channel. So it's not, if you see another the latest post I created for the pound US dollar, it was based on this hourly and 4-hour channel, but now the market showed some different behavior. It violated the upper line within a day 3 times, so that doesn't make that channel very valid. Now, where is the room of opportunity in this currency pair? We understand that there is a strong resistance here. If there is a strong resistance here, it means the first target has to be until the R1. Okay, now if for A, B, C, D reason you decided that you want to keep the trade for more, that you have to understand that it's not always the case, as there is resistance, and at resistance anything can happen. Maybe big volume, it's going to enter the market, and sellers are going to press this market lower, and we're going to experience continuation of the downtrend. Remember, the daily is down, weekly is down. Now we're going to try and see on this new series of higher highs of the hourly chart if we can take some trades to the upside, but we have to understand again that there is a barrier here. Now, ideally, this market, if it's going to break to the upside, if the price is going to break and close to the upside, we see that there is a fairly room of opportunity to be made of this much here, from here to there. We can use this tool to measure, and it's about 150 pips. So we can even go to a 15-minute, 5-minute, 1-minute chart and trying to apply our strategies to capitalize on the long side. But if the price comes up to here and start playing around, and you see that the indicator start making lower lows and it become weaker and weaker, that's a strong signal for the sellers that they might going to take control again. So I will be looking to play this pound USD in both ways next week. With a break and close above this resistance, I will be use my strategy that involves some fib retracement tools, involves of course the Bollinger Bands, and involves price action to see for some retracement and get into the upside and try to capitalize until this area of resistance up here, the R2, or if it's going to experience exhaustion and strong reversal price action. Preferably, I prefer bearish engulfing at the resistance, and some bearish divergences on the indicator, on the RSI, that will be good enough for me to short. Anyhow, for any bearish divergence at resistance after this impulse move, the price will be around or below the upper band of the Bollinger Band indicator. Thank you so much. If you find this valuable, please comment below. Let me know your things and thoughts, and I will create the next one on the gold and post it in a while.